Looking back on the month of June, several positive developments unfolded for the stock market. At the beginning of the month, two rate hikes were being priced in. Today, it has been reduced to only one. Geopolitical tensions with Iran at one point was a major concern in the stock market, but those tensions have eased with a temporary agreement being reached in the month of June. But the real question is, what should investors expect in July? My name is Garrett Crow. I am a first year finance major at Washington State University and an active stock and ETF trader. In 2025, my portfolio had an annual ROI of 49%. When I first started my portfolio, I made it my goal to grow it to 7 figures. So if you do want to follow me on my 7 figure journey, make sure to subscribe. And for short form daily stock analysis content, make sure you check out my Instagram and or TikTok. In today's video, I will be providing you guys with my monthly portfolio review, specifically the current logistics of my portfolio, how I performed in the month of June, what I learned, and most importantly, what I am looking to do in the month of July. Let's dive in. First, let's take a look at my portfolio's logistics. My portfolio is currently valued at $13,894, which is slightly lower than it was in my previous portfolio review. Looking at my largest holdings, SoFi remains my biggest position, making up about 14% of my portfolio. My second biggest position being Palantir, making up right around 12.5% of my portfolio. And the third, newly largest position in my portfolio is now Dram, which I recently increased my position in from 3% to right around 10%. Some of my smaller positions include CRDO, COHR, GLW, IREN, and several other positions that I am monitoring closely. Overall, I am happy with how my portfolio is positioned. While I still have a few positions I would like to adjust, I believe the portfolio is becoming increasingly diverse while still maintaining significant exposure to sectors I am most bullish on. Second, let's discuss how I performed in the month of June. When we take a look at my realized gain loss, the numbers initially appear a little bit daunting. However, there is important context behind them. The biggest lesson came from my Robinhood position. In June, I sold a total of 8 shares, 5 of which were at about 11.5% loss, and 3 of which were at about an 18% loss. At first glance, that doesn't look very good. However, here is what actually happened. When I sold these 8 shares, my overall Robinhood position was in the green, up about 25%. Although when I executed the trade, the order type was first in, first out. That meant the earliest shares I purchased, which were still below my cost basis, were the shares that were sold. Ironically, right after I sold these 8 shares, my percentage ROI went from 25% all the way up to nearly 40%. Although this trade makes the realized gain loss look pretty catastrophic, on the bright side, me making this mistake had no actual impact on my portfolio's total value. More importantly, this trade acted as a very valuable learning experience. If you have been following the channel for some time, you are aware that I hate selling stocks at a loss. So this reinforced the importance of understanding exactly what tax lots are being sold in what orders. I also sold 1 share of GLD at about a 10% loss. Now, I know that may sound counterintuitive, being I just stated I typically don't like selling stocks at a loss, but I do have good reasoning behind it. When I initially purchased this 1 share of GLD, I was extremely bullish on precious metals. It was pretty close to that silver and gold bull run, but currently, I'm still bullish on gold and silver long term, but I am far less bullish on gold and silver long term than I am several AI stocks like, CRDO, GLW, WDC, DRAM, etc. So I felt it was in my portfolio's best interest to free up some capital to allocate to some other stocks that I was more bullish on. On the positive side, I did lock in several strong trades. I sold 3 shares of DRAM for a whopping 41% ROI, another share of DRAM for a 33% ROI, and 1 share of IRON for a 25% ROI. Overall, June was not my strongest month from the realized gain loss standpoint. However, I did learn many very valuable lessons, and I am confident with how my portfolio is positioned for the future. Third, here's what I'm looking to do in the month of July. There are several stocks in my portfolio that I am extremely bullish on. However, I have chosen to only allocate roughly 3% of my portfolio to some of these stocks, being I typically like to enter and exit positions in chunks. So, my primary focus in July is to increase my position in some of these stocks that I am extremely bullish on, while decreasing my position in some of the stocks I am less bullish on. The 3 companies I am currently watching very, very closely are CRDO, COHR, and GLW. Now, I have allocated about 3% of my portfolio to all 3 of these stocks. In the month of July, I would like to increase my position in all 3 of these stocks if an opportunity presents itself to right around 6%, maybe even a little bit higher. Overall, July will be less about making frequent trades and more about repositioning my portfolio to where I am more allocated in the stocks that I am extremely bullish on rather than being overly allocated in some of the stocks that I'm still bullish on, but maybe not as bullish as, some of these other companies. In conclusion, June was not my strongest month, and by no means am I satisfied with the realized gain loss. However, I do not view the month as a failure. Instead, I view it as a learning month. I really want to show my appreciation to the ones who made it to the end of the video. If you did and you enjoyed, please make sure to hit that like and follow button and comment down below mini basketball hoop, and I'll make sure to like your comment. I want to leave you with this. Every month is another opportunity to improve and expand your knowledge. Not just the precise trades you make, but the decisions behind them. I hope you all have a great rest of your day. Thank you.